A for
Awesome return.
B for
Bull market.
and C for crash. Yes, this is what can happen if you wake up one day feeling like investing in some hidden gem like stocks to make huge wealth, resign from your job, buy a property in Goa, and then what? Just spend the rest of your life there. Well, let me give you a reality check. We know that the stock markets have been quite rosy for the past few years. The well-known index BSE Sensex has given 27% CAGR return since April 2020. But, remember, you should not set your expectations based solely on how the markets have been during the past few years. If you do that, let me tell you, you may get a great shock once the markets turn volatile. No, I'm not trying to scare you here. The whole idea of this video is to guide you to take your first step of investing in the stock markets the right way. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance. So, you need to know certain basics before you jump into buy your first stock. In this video, we are going to discuss the basics of stock investing. I will share a golden rule to select your first stock for investing your money. Now trust me, this rule is going to make it really easy for you to pick that one stock where you should invest. But before that, let's dig into some basics. Now, what is a stock? So a stock represents ownership in that company. For example, if a company has 100 shares and you own 20 shares out of it, that means you have 20% ownership in that company. Take for example Reliance Industries, which is India's largest company. It has about 676 crore shares, out of which the public holds about 323 crore shares. Now this tells us that the public, people like you and me, own around 49% ownership in the company. Therefore, if you own 100 shares in Reliance, you own a very little part of the company. Now the price of the share goes up and down based on company's financial performance, future plans and many other factors. If the financials are looking good and future plans are likely to make the company more profitable, then the share price is likely to move higher and vice versa. And people benefit from this change in share price either through investing or trading. Investing and trading in stocks aren't the same thing. Well, no, they are totally different. Investing is defined as buying and holding a stock for long-term gains, typically 1, 2, 5, 10 or more years. On the other hand, trading means when you involve yourself in buying and selling stocks for short-term gains. Here, your entire focus is on profiting from the stock's price movement, not buying based on company's fundamentals or financial performance. Now, compared to investing, trading is much more technical and complex, as one needs to have specialized skills to analyze price and volume charts to determine the possible future price movements. This makes trading riskier and the chances of losing money are also higher. But why am I telling you all this? Well, that's because as a beginner in the stock market, you should avoid trading stocks. Instead, start as an investor in stocks. Coming to the most interesting part of this video, how to find that one stock with which you can start investing in the stock market. Now, there are more than 5,300 stocks listed on Indian stock market. However, not all stocks are investment grade, meaning like some companies are struggling to make a turnaround, some are experiencing operational issues and so on. Such stocks tend to not perform well. So how would you know which one stock is doing great? Now, one way is to study the financial reports and financial statements of various companies to get an understanding of the strength and weaknesses of those companies. But that comes later during your journey as an investor. Now, second way is the golden rule of picking your first stock. So start with investing in companies that you are familiar with, whose businesses you understand. Look around you, the products that you are using as a consumer. Those are the companies where you can start investing your money with. Now, I would not take names of the companies because I guess I have given you the easiest way to pick your first stock. Now, it may be a company whose cosmetics, clothes, grocery, food, cars, some restaurant chain and n number of items you may be using at your home. So you know as a consumer that how their products are selling or not selling in the market. As a consumer, you can judge the future prospects of those companies. Now, basis this rule, tell me in the comments below if you have some stock in your mind, some company in your mind. Now, you must be thinking, was it that easy? Will I make multi-bagger returns with such a simple strategy, a common stock? Don't I need to find a hidden gem that could maybe give me 4x, 5x returns? Well, these are the mistakes that beginners do while making their first move in the stock market. Do not fall for them. We have made a quick separate video on the same. Do watch it after the video. The link is in the description below. Oh, if not 4x, 5x, then how much returns can you make in stocks? After all, you were planning to invest in them for huge gains. Yes, people have made abundant money in the stock markets, but there are many novice investors who have lost their money as well. So as a beginner, avoid chasing extravagant, extraordinary returns. Consider an average, I would say 12 to 15% as good decent returns from the stocks in the long run. This is also the historical average annual return of the Nifty 50 index. Now, Nifty 50 index is a stock market index that is made up of 50 largest companies of our country. Each stock in the index has different weightage. For example, HDFC Bank has 10.97% weight in the index, Reliance has 10.28%, ICICI Bank has 7.68%, and so on. How much the index goes up and down in a day depends on how these stocks have performed. Since we have spoken about Nifty 50 index, another widely used index is BSE Sensex. Now, this represents the biggest 30 companies of our country on stock exchanges. Now, let me tell you an interesting thing here. The company that you may have selected using the golden rule I spoke about earlier, that may be a part of Nifty 50 or Sensex indexes. If that is so, do let me know in the comments below. Now, before we end this video, let's talk about some technical details here. Now, you will need a demat and a trading account with a reliable stockbroker to start investing in the stock market. A demat account is where the stocks you purchase are electronically stored, and a trading account is through which you perform buying and selling operations of stocks. And with this, we have come to the end of this video. We'll be making more videos on stocks in the coming weeks. Do tell us in the comments if you have any suggestions or what kind of topics you would want us to present specifically related to stocks. Before I leave, please don't forget to like and subscribe to our channel, and we'll see you soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.